Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin. And as there's many new people on the channel, please make sure to always check out the timestamps, as behind a timestamp I always write same, update or new to show you what is different in this video compared to a previous video, where the same is a scenario didn't change, update of course there's some new information, and new means there's a scenario that I haven't yet shown before. Starting with the first scenario here, which is an impulsive structure to the upside, a bullish scenario on the daily time frame, where we have a finished 5-wave impulsive structure to the upside in a wave 1, look for a wave 2 and then a wave 3 towards the upside. The common target for your wave 2 is between the 0.5 and the 0.786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. The 886 as 58.2k is a very rare target for a wave 2, we don't want to hit it, and the invalidation is 56.5k. You can also see a vertical line on the chart that is a fib time taken from the start to the end of wave 1. Most commonly, a wave 2 is finishing after the 0.382 fib time, sitting on the 21st of June, so therefore we at least have to consider bigger 3-wave corrective structures, after which we then expect continuation to the upside. A bigger 3-wave corrective structure can be a zigzag here on the 4-hour time frame. A zigzag is also a common structure for a wave 2. Here we then have a 5-wave move to the downside in a wave A leading diagonal 1, 2, 3, 4, 5, looking for a 3-wave corrective structure to the upside in a wave B, which most commonly is a zigzag in a 5, 3, 5, and then another 5-wave move to the downside in a wave C. Your leading diagonal here might be finished at this particular low, but if we do come down one more time, we at least do not want to hit the 1-to-1 trend-based fib extension taken from the start to the low of 3 to the high of wave 4, because a wave 5 is not allowed to be longer than a wave 3, as that invalidates a diagonal 62.2k. There is still some support above this invalidation, which is the blue box here, 62.6k to 63.1k. The common target area for your wave B is between the 382 and the 886 Fibonacci, taken from the start to the current low over here of the potential wave A, giving you a target between 67k and 71.1k. This of course is quite a big area, and that is why I like to look at my additional resistance areas. First of all, around the 382 we have this blue box, 66.6k to 67.1k. Then we have 69.1k to 69.7k, and finally 70.8k to 71k. After B is in, we then look for an impulsive structure to the downside. You can see that the target for wave C is on the chart, most commonly between the 1 and the 1.236 trend-based fib extension, taken from the start to the current low over here that we have, and I took it to around this resistance area 69k-ish, which then gives you a target between 61.6k and 59.7k, which is in confluence with the support box that I have here on the chart as well, sitting between 60.5k and 61.6k. After wave C, we are then looking for continuation to the upside. The second scenario is also a scenario where you first take out the all-time high, after which you then move down to take out 56k. This is an expanding flat, a 3-wave A, 3-wave B, and a 5-wave C towards the downside. The most common target for B is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of wave A, giving you a target between 77.9k and 80.4k. The 1.618 is a rare target for a wave B, and if price would move to the upside to touch the 1.618 at 84.5k, it reduces the probabilities for this scenario, increasing probabilities to continue towards the upside. Inside wave B, we most commonly look for a zigzag family pattern, either a 5-3-5 ABC inside wave B, a double zigzag, a WXY, or even a triple zigzag, but that is very, very rare. So on my chart, I have a double zigzag. We have a zigzag here in W, Corrective structure in X, looking for another zigzag 535 to the upside, which means that after wave X is finishing, we want to count an impulse 1, 2, 3, 4, 5 towards the upside, look for a 3-wave retracement and another 5-wave impulsive move. The common target for your wave X is between the 382 and the 618 Fibonacci, taken from the start to the end of W, giving you a target between 66.1k and 62.4k. You don't want to hit the 0.7 as wave X at 61.1k, as that significantly reduces the probabilities for a double zigzag to the upside. In wave X, we need to look for a 3-wave corrective structure to the downside, currently labeled as a flat. So here we have a flat structure, 3-wave A, 3-wave B, and then a 5-wave C to the downside. The invalidation is once more the 1-to-1 here at 62.2k, and after wave C, we want to count a 5-wave impulsive structure to the upside, and that is significantly different compared to the more bearish scenario, which is the zigzag, because here we're looking for a 3-wave structure to the upside in a wave B and then another move down. But here we are looking for a 5-wave impulsive structure to the upside. So the move towards the upside is going to give us more information if we are looking here for an ABC and then continuation to the upside, or a 3-wave corrective structure and another move towards the downside. The bearish scenario on the daily time frame is a zigzag to the downside in an ABC, after which we then expect continuation to the upside. The most common target for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A to currently the highest point in wave B, giving you a target between 54.6k and 50.5k. Inside wave B, we are then looking for a bigger 3-wave corrective structure with a finished zigzag in W, looking for a wave X, but now a wave Y to the upside that is not going to take the all-time high. In this case, we are looking for a sideways double combo WXY and not a sharp double zigzag WXY, which means that because wave W is labeled a zigzag to the upside, this wave Y cannot be a zigzag. It has to be either a flat structure or a triangle, and that is something that depends on the bounce towards the upside locally. Looking at the volume profile, then we have the point of control just above us here at about 67k. Flipping this point of control back to support will increase the probabilities to move to the value area high at 70.1k. The value area low is at 62.7k. On the 15-minute time frame, before price actually took out this high, we had an 886 touch, and that decreases the probabilities that this is a wave 1, 2, and then look for a bigger wave 3 to the downside, increasing the probabilities to sooner or later take out this high over here, which of course has now happened. Now yesterday, in the final update of the day, I was talking about CVD and what I will be looking for to see some signs of strength, as during this move to the downside, every bounce that we had was countered with small bearish CVD divergences, not giving a lot of confidence. So eventually what we were looking for was price to invalidate bearish CVD divergences and also counter with bullish CVD divergences. So we had a bearish CVD on the chart here, which got invalidated the moment we took the high over here. Also, we saw that this bearish CVD divergence was countered with a little bit of bullish CVD divergence, and the same happened here as well. A little bit of bearish CVD, okay, but once again countered by bullish CVD divergences. So the bullish CVD divergences were stacking as price was moving towards the upside, invalidating the bearish CVD divergences, and just before this push to the upside, we had some more bullish CVD divergences. So now the bullish CVDs that we have on the chart here played out as price took this high, and now we just continue to observe what price is going to do. As long as price is moving to the upside on a bit of increased volume, we have to wait for a range to form. We do have some resistance to the upside. First of all, the 4-hour gap here, 65.8k to 66.1k. And then we have the blue box on the chart here, 66.6k to 67.1k. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are highest to take the all-time high first instead of taking 56k first. On the 4-hour time frame, we're looking for that diagonal, so we're looking for a bounce towards the upside downside sooner or later, and on the 15-minute time frame the probabilities were higher to take out this local high, which has now happened this morning. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.